Doesn't that show you that?
Okay, but that is a unique, perhaps once in a lifetime kind of move increase in earnings. I mean, they came into 23. Analysts were expecting like 20-something billion in earnings. They did 60.
But I'm saying that if that's able to do that, maybe we are being too negative. That Nvidia, the greatest story of all time, arguably, turned out to be very cheap. That's not supposed to be. That means that maybe.
And as a result, every other name is cheap?
No.
Is cheap.
Reddit is cheap.
A year ago, Nvidia's stock appeared overvalued at 50 times forward earnings, but it turned out to be undervalued at 20 times earnings, as the company far exceeded expectations. This highlights how sometimes stocks we consider overvalued can actually be undervalued, and Nvidia's success proves that we may be too negative in our assessment. While many are looking for the next Nvidia, it's important to recognize that there may not be another company like it. Companies like Joby may seem promising, but careful analysis is crucial. Bold investments in technology, such as humanoid robots developed with Nvidia chips, show the payoff of innovation, but the question remains: how long can Nvidia sustain its earnings growth, and what's next for the semiconductor industry?
If you take a look at the stock of Nvidia, which we all think is an unbelievably good stock.
Oh, we think it's an unbelievably good company.
Right. Okay, so
I'll allow you to say it's an unbelievably good stock.
A year ago, the stock looked like it was selling it at 50 times forward earnings.
Okay.
It turned out to be selling at 20 times earnings because Nvidia far exceeded what anyone thought it could do. So you could have bought that stock at 20 times earnings last year. You could have bought it at 18 times earnings before the big ramp in May. And we sit here and we think, what an overvalued stock. It turned out to be undervalued.
Right.
It turned out to be radically undervalued versus the S&P, versus General Mills.
I was going to say, that's why Jensen's trip to Japan was so interesting, right? And he's been talking about sovereigns for a long time.
Yeah.
But this was a real step to say we're not just about these four hyperscalers.
Right. And let's look at the Gulf region. So you're going to see
That's
a lot
exactly
in the Gulf.
where I was going with you. Because we have restrictions in place, and those need to be lifted potentially.
Right. We just came back from Riyadh, just came back from Abu Dhabi, just landed a few days ago. And what we're seeing is Riyadh made a big announcement with Google as an example. They're contracting to use many more TPUs from Google, but also GPUs from Nvidia, right? They want to have as many as possible. You're going to see the Emirates make more and more announcements there as well. But we also need to see the largest global 1,000 companies really shift into AI, again, not just on customer service, but product development. And that means quantitative AI, not language AI. AI that knows biology, knows how to make a new drug, like Sanofi and other kind of companies using AI now to make actual new product. That's what we haven't seen in big numbers yet.
Maybe even talk about the underperformance of semis, although maybe this is that conversation right now. So it's partially because I think we've priced in so much good news that you had a day after the day after on Nvidia. In other words, stock finally did give up a little bit of ground.
Nvidia was down today, right? Yeah, it didn't. There it is.
But I as we argued even yesterday, and I think even the 3.4% move today is something that, all things considered, the zoom into those numbers, the fact that I think they kind of downshifted successfully in terms of the guide. But software is moving because it is really seen as the next reverberation out. You throw a pebble in the water, guy, what happens?
You get ripple effects.
Okay, you get ripple effects, and that's really what I think is happening. No, but I mean,
the ripples go away.
The ripples go away eventually, and I think at some point what we've seen other times is software has actually followed semis, and I think that's happened again. I think software, ton of upgrades this week, but we heard it from everybody, from Snowflake, even Datadog, who I think 6% of their ARR is actually an AI customer base, yet that base tripled in the last year. That's the kind of thing you do in software, and none of these valuations make sense. And we've talked about this with Palantir. I think it was 38 times forward sales, which is absurd. But the argument here is that if you're playing AI, you're playing it through the enablers, and software platforms have different ways to do it. And frankly, that's the way a lot of the consumers are reaching out, but more importantly, enterprise is happening right now. And I think it continues.
Bonawyn, thoughts on the broader market hitting new highs on the Dow, the S&P within a hair of 6,000, or pick up on Tim's thinking on the semis versus software?
So I'm going to be defensive and offensive.
Okay.
So I'm going to avoid the
Ooh.
question first and then answer it second.
Very nice.
So in terms of the broader market, listen, I think we're in essentially an everything rally right now. Going into the Nvidia print, I think a lot of us spoke about how we were a bit concerned about that. We'd like to see it perhaps trade a little flat or perhaps just be a bit more defensive in terms of posturing before going into that print. I think that kind of explains the move that we saw post-earnings because it was yet another blowout quarter. I think questions about Blackwell supply and ability and back ordering and pull forward of ordering there, I think those concerns have been assuaged. And then in terms of the divergence between what we're seeing from SMH and I Give Up, is, a lot of those names, let's take Salesforce, for example. The question was, and this is also with some of the hyperscalers, this AI-related CapEx spend needs to be justified. That was the prevailing wisdom at the time. And these companies were coming under pressure because investors really didn't feel like they had an accurate answer to that question. You saw Salesforce trade off, I don't know what it was, 20, 25% post-earnings. Mm-hmm. And so a lot of those names had gotten beaten up coming into the print. And so that explains a bit of it. It's essentially you have like a star player like Nvidia dragging up the rest of the balance. And so you've kind of been mired in that drag because, again, there's been a massive divergence between AI-related CapEx spend and then CapEx spend going forward.
Where do you put money now, Julie Beal, as between the semis and the software stocks? Where would you go?
Still think that software is a much better place to be because these are more profitable businesses. They have much better levels of recurring revenue. They're less capital intensive, they're less cyclical often. So I'm always going to prefer, all things neutral, I'm going to want to prefer a software name. But I think what's interesting to me is just this dynamic that we're seeing with NVIDIA and then everyone else is a little bit reminiscent of the telecom boom that we saw. I don't think that is necessarily sustainable over the much longer term. I think in the near term, they can continue to be dominant. But longer term, you should see a broadening within semis.
Is there something wrong with those other stocks that haven't participated among the chips, or is it just that Nvidia is doing everything right, or has this immense tailwind moving it forward?
I think that the average semi company does not have this moat of development that they do, where the actual programming language is something that you learn and it's something that you build around. Very few semiconductor stocks, particularly if they're not analog stocks, have that. And that really is the core differentiation because it doesn't just solidify the current business, it really paves the road for the future.
Can I finish? No, people say, I want the next NVIDIA. And it might be Reddit. Maybe it's AppLovin. That's all that's happening. And who am I to squelch?
I'll tell you who you are. You're a guy who's been on TV yapping about this stuff for 20-something years. You ran a hedge fund.
26.
And on and on. And I could easily see you sitting here in 10 minutes and saying these things are all completely hot air.
Well, no, I'm saying that those are two different things. There's a dichotomy, okay? There are people who say, I want the next NVIDIA at $3.5 trillion, and there are companies that could be the next NVIDIA. But people are not discerning. They are saying, you know what? Maybe Joby is for real.
First of all, there's not going to be another Nvidia.
How many do you think there are?
There's only one.
There are many people who buy lottery tickets every single day.
Oh, so now we're playing the lottery.
Really? Joby. We're into flying cars. Why not?
Okay.
And we know what the total addressable market
All right.
be.
Look, there's a person. I'm going to tell you a wild story.
Really?
Do you know that there's a man who has maybe the largest supercomputer in the world in Tennessee?
I do,
and he
actually.
spent a fortune on NVIDIA chips.
I know a lot about that,
Maybe
yes.
tens of billions of dollars.
No, not tens of billions. Yeah, not yet.
Hundreds.
No. He's going to spend $10 billion.
Okay. And he's
probably
developing.
on chips. Yeah,
I'm going to make
that.
David live. He's developing humanoids. How crazy is that? David, I'm saying that the crazy stuff is paying off in many humanoids. Right. Elon Musk is developing humanoids. There's two billionaires fighting against each other, right? In tweets.
Bezos and Musk, you're talking about.
And these guys, and I want a piece of that.
I'll tell you one thing.
Everyone wants a piece of the action, David.
Two of them.
How does this speak to what's working and what's not, what's overhyped, and what actually is going to deliver on the promise?
Well, great question. We look at Nvidia, for example, right? We saw the earnings yesterday. How long can they sustain such monster, kind of quarters? And what I would say is, if we want to see that kind of sustaining blowout quarters, quarter after quarter for the next 2-3 years, What we're going to have to see is a shift just from the demand being consumer side. Right now, we're seeing most of the demand paying $20 a month using OpenAI. That's a good initial start for AI. But that's not going to sustain Nvidia going to 5, 6, 7 trillion in market cap. What do we need to see that? We need to see different sovereign entities, that is, different countries wanting to build their own data centers. Jensen mentioned this in his earnings. He knows that's one of the critical things. Number two, we need to see really big business actually using AI, not just consumers. We haven't seen that shift yet.
So I want
Nvidia's explosive growth has shown how perceived overvaluation can be misleading, proving itself a transformative force in AI and computing. Initially thought to be overpriced, Nvidia's success highlights the potential for innovation to redefine value in tech, challenging investor skepticism. While many seek the next Nvidia, such achievements are rare. The focus now shifts to sustaining growth and identifying the next big drivers of innovation. Balancing optimism with caution will be crucial in navigating future tech opportunities. Is there another company that could match Nvidia's groundbreaking success, or is it truly one of a kind? What industries or technologies do you see shaping the next big wave in tech growth?